Hey everyone, I've had a bit of a request to put through a basic video about leverage. I'll just start with a bit of a disclaimer here, and that's that if you do not have a consistent win rate and a decent trading system, you probably should not be just jumping straight into leverage. Um, because it's a really fast way to either get completely wrecked or build an account quickly if you've got a good system. Okay, so that's the disclaimer over and done with. Now, what I tend to find is a lot of people don't really understand the reasons for leverage, and there are some of the reasons are simple things like you have a trade idea, you have an entry, you have an invalidation, you have an area where you're going to take profit, you're willing to risk a certain amount on that trade, um, but you simply do not have enough money in your account. Okay, so in this example, I've just got set up on the screen here. I have a trade idea, which is that I want to enter in this hold candle. I've got ranges that have all been broken or hit, so I've got targets that I want to go to, and I have various places of invalidation based on risk, right? Um, and if you don't know what all of that means, then you probably should not be doing leverage just yet, and you should be looking at some of the other videos on trading. Now, based on that, I've set this up so that I have a $100 account balance, and this is just a website called cps.cx. It's just a basic little tool. There's lots of tools out there, but this one's just pretty plain and simple and doesn't advertise too much in your face. So I've set it up so I've got a $100 account balance. I want to risk that whole account, which is $100. I'm going to enter at 187. I'm going to lose my $100 and get stopped out if it hits 172.378. And when I hit calculate, what that tells me is that I can open a position of 1179.38. Now, the problem is I can't open a position of 1179.38 if I only have $100. And that is where leverage comes in. So I know that based on my risk of losing the $100 and my account balance being $100 and where my entry is and where my stop loss is, that if I was to take this trade, I could use some leverage because I would need to get to this dollar figure. Now, mathematically, how do I make $1,179 position out of $100? Well, I need to use leverage, and that leverage would be around roughly 12x, to actually get this amount of money into that position size. Now, that is one of the main purposes of leverage, and a lot of traders use it even though they don't necessarily have to. So let's look at this another way. I have a $10,000 account and I want to risk 1%. So I'm still only risking $100. So when I hit calculate, well, nothing changes because my position size based on the risk doesn't actually change. If I only want to risk $100, being 1% of the 10,000, well, it's still the same position size. But if the position size is $1,179.38 and I have $10,000 in my account, I don't actually need to use leverage because I could open that as a spot position, a 1x. I could do whatever I want really because it fits within the amount of money I have in the account. So I guess the thing to take from this is that leverage is a way to open a trade if you're really sure about what's going to happen, but you're trying to use more money than you have in the account. Okay, so that's effectively one of the purposes of leverage. And if we were to then just say, okay, well, what type of risk? Let's say I wanted to risk 5% of my account. Well, 5% of my account is still going to fit within my $10,000 account size. What if I wanted to risk 10? Well, now 10 is getting a little bigger, right? So now if I wanted to risk 10% of my account on this particular trade setup over here, then I would have to use maybe a 1.2x because 1.2x would be a size big enough to actually give me the risk of $1,000 out of the $10,000. So you can kind of see where leverage comes into play. It's all when you're effectively willing to risk based on the distance between your entry and your stop loss, what you would lose versus the account size and the risk that you're actually willing to take. So that is the point of leverage. So Now I could look at my trade risk. So I know that down here in my trade is below the trend. It's below the previous interior range. It's below the current range, and it's below the older range. So this is a really, really low risk place. Price is not likely to go there. It's more likely to go up to the top side. Okay, so that's a really, really low risk. So what if under the same rules, I wanted to tighten up my stop loss? So let's take it up and let's place it under this range. Okay, so I've still got a trend as protection. I've still got an interior range across here, which has already been swept, and I've got that as protection, and I've got this higher time frame range. And I know it's higher time frame because there's 3 candles in here, and 2 candles is the pure daily time frame. So okay, so let's come back over here and let's change our stop loss. So we are now going to be 176.556. So when I go calculate, that now gives me a position size of a little over 16,000 on a $10,000 account. So now I could be opening, say, a 1.6x or 1.7x position based on this, based on my loss, and based on what I wanted to make. So that is really leverage. Now let's go with really high risk. I've got a trend, so I'm going to suggest that trend is going to protect me. I've got this interior range. It's already been swept. It's not likely it's going to get swept again. So let's tighten up the risk. And let's go to say 182. We'll go sort of halfway in between the 2 ranges. So maybe down a little bit more. So let's just go about there. So we're about halfway in between the 2 ranges. And so now let's say, okay, so we're 181.382. Let's have a look. Okay, so now I could open a 3x. Okay, but you can see a 3x in this particular instance is still a very risky trade. I've literally taken my stop loss, and I'm going to lose $1,000 if it hits this stop loss. And if I just put that in here, what does that look like? $1,000, 100% risk. Okay, so I'm going to lose $1,000 if it hits my stop loss. And up here, my account size is going to change from $1,000 to $4,535. So I'm going to make a 1 to 3.5 trade. And if you can pull these off repetitively, you'll be able to grow your account quite quickly. And to do that, you can use leverage to assist in that actually happening. Which is probably not quite right, really, because I should set this up the same. So I've got 100, so I'm going to take 10,000, I'm going to put it into one lot size, and we're going to risk 10%. Okay, that's probably a little bit more accurate. Okay, so what that's saying is that my account will end up being $9,000 if I lose this trade, and my account will end up being 13,535 if I win this trade. And that's based on me using leverage of around 3x, because I'd need to go 3 times the 10 to actually be able to open that position. Okay, so let's see. Do I win or lose? I already know the answer because it's on Replay Tool, but this will give you a bit of an idea. And hit play. Okay, so we won. We got that entry. We never actually got to the trend. We basically went straight off the whole candle and we went back up to the high. So that's great. Could I have taken more risk and gone just up to the backside of the trend? Well, I could have, based on when it actually entered. So let's say there. Granted, you don't know when the price is actually going to enter. So let's see, what could I have done? The absolute highest risk at that time would have been about there, and that's 183.1, 183.182. Okay, so I could have used about a 4x. Okay, so this is a daily time frame trade, so you generally speaking aren't going to be using a lot of leverage on high time frames, but that is a bit of a run through on how leverage works, why it's really just related to the risk that you're wanting to take, how much you would use, whether you even should use it, whether you even need to use it. It's all based on where your entry is and where your invalidation is and the amount of money that you're actually willing to risk. is the gist. So yeah, hopefully that gives you a bit of an understanding of it. That website again was cps.cx if you want to go and have a play with that. And just to revert back to the disclaimer, please don't use leverage unless you actually already understand all the things about trading and the setups for trading, because yeah, a lot of people will win once or twice out of luck, and then they'll lose it all on the third one. So just, yeah, be careful out there. Cheers. Bye.